Hello, good morning, everyone. Welcome aboard of today's webinar, the Spanish renewable energy market, current state, and the PPA market. My name is Max Wu, Program Manager of PVBOX. I'm so happy that so many professionals are joining us this morning. I hope you all are safe and healthy. And in today's webinar, we are going to talk the Spanish renewable energy market, which is very promising, and where more than 6 gigawatts of the renewable being added in 2019, which placed itself in 10th place of top 10 worldwide installed renewable capacity. However, 4 months has passed. What is going on with this dynamic market will be the theme of today's webinar. Joining the webinar, we have 2 great speakers, Mr. Kim Keith Martinez from Econ Strategy Consulting, Mr. Miguel Marroquin from our New Energy. For something emergency, Mr. Francisco Espinaza cannot join the webinar at this moment. For that reason, this webinar will be kept in 1 hour instead of 1 hour and a half. And continuing the webinar, let's go through the agenda and take quick review. So firstly, there will be some slides of intros of PVBOX, intros of our speakers. After that, I will leave the floor with Kim Keith Martinez, who will be looking at the impact of COVID-19 on demand, commodity price, and electricity price. And Miguel Marroquin will be focused on the Spanish PPA. After all speakers finish their presentation, we will jump into the Q&A. And you can submit your questions by hitting the Q&A sessions on the left side of your screen during this presentation. And please feel free to submit your questions. So firstly, as I mentioned, who we are, PVBOX or EnergyBox. EnergyBox is the new brand we are going to use in the future. PVBOX is a vertical media company dedicated to the renewable energy. And enrolled in China, we are one of the top 3 most influential media in our domestic market. And to enhance the business cooperation across the land and inland, and to promote green energy. PVBOX events are held around the world, span Europe, South Africa, South Asia, and up to now, we have 12 events in record across the world. Besides, we provide professional and customized promotion plan for our clients, and helping them achieve their goals by our networking, such as publication, online platform, international conference, and forum. And now, continuing our the webinar, and back into our speakers. Mr. Kim Keith Martinez is a director at the Key4Key Training Advisory, and also the director of Econ Strategy Consulting. He is specialized in transaction support as independent market and economy advisor for major power project developers, financiers, and fuel supplier. And he has supported the successful completions of 52 gigawatts of the conventional and renewable power projects, and 471 MIGD of water desalination projects, with a transaction value of $35 billion over the past 18 years. Mr. Miguel Marroquin is a managing director of our New Energy. He is also the founding partner of our New Energy, an energy services and consulting company with extensive tracking records in structuring, origination, and the negotiation of market parity PPAs, and having closed over 2.5 gigawatts of the long-term fixed price PPAs for on-site projects. So the first presentations will be given by Mr. Kim Keith. He will looking at the impact of COVID-19 on demand, commodity price, and also the electricity price. So now I will leave the floor with the Kim. Hello, Kim.
Okay, good. Hello, everyone. Good morning, good afternoon, depending on where you're at or sitting. We have a lovely day here in Madrid. This is where I'm sitting. Thanks very much to PVBOX, good international corporation there, all the way from China. We're a lot closer to home here. What I want to spend the next, and then try and give you a bit of a feel as to what it is that's good to bear in mind if you're trying to figure out how to make an assessment in the future as to what it is that's going to be really driving things forward. To jump ahead quite quickly, demand is less important. I know it gets a lot of attention and there's a lot of data, which we can, the relationship between economic growth and demand for electricity is pretty clear. Both things move in a similar direction. Nevertheless, it's actually the commodity prices, things like gas pricing and carbon dioxide, CO2, which is really driving things forward. Now, I don't want to say too much about us. You'll probably get copies of this presentation anyway. So if you have any particular questions, you can also feel free to review these and then contact us directly at a future point in time. Okay. Some of you may have heard this little presentation before, but I think it's useful to sort of have a little simple model in mind. I know lots of people, I'm an economist, by the way, by training. So you'd expect me to start talking about supply and demand and swinging my arms about, which I'm very competent at. But the one that I've sort of keep going back to try and understand what the impact is going to be of penetration of renewables, and as a result, what the impact is of COVID-19 on what's likely to happen, is basically what I call the parabola chart. We talk about, I'm going to use photovoltaic capacity for reference, and what I'm trying to get to is draw a picture in your mind as to what it is that's likely to happen as the PV penetration increases in a market where you just have like two simple technologies. One of them is just combined cycle power station, and the other one is a little bit of photovoltaic. What you have in the top left chart is basically a representative daily demand, which is more of a summer profile, 24-hour window. The daily demand there increases in the middle of the day, and what's missing here is the evening peak. So currently we're still in a sort of winter profile, and a winter profile you tend to have a higher evening peaks. But let's leave it aside. Let's keep it simple with PV. And the only other technology we have is combined cycle. Combined cycle, by which I mean, cut long story short, generally speaking, you talk about two gas turbines, the same type of things you put into jet airliners. You stick it to the ground, you feed them with natural gas. Instead of having a propeller at the front, you basically feed you feed the two generators. The exhaust heat goes into a heat recovery steam generator, creates high pressure steam, and it goes into another steam turbine. That's why it's a combined cycle, because it's a two-phase process, about 50% thermal efficiency. So what happens under these circumstances when you have only a little bit of PV? And the answer is, well, because there's space between how much PV and what the daily demand is, obviously the combined cycle sets a price. This is a theme we will keep coming back to over time. The only other assumption is it will make commercial sense to keep deploying photovoltaic capacity because it's actually cheaper on an all-in cost basis than having to run a combined cycle power station, okay? So what we do is we build a bit more photovoltaic capacity. Eventually, enough photovoltaic capacity comes online that it meets all the demand in a particular hour, right? And regardless of what your thinking is around the issues of weather contracts or what type of market design you should have, the fact is, if the sun is shining and everyone's dispatching, the marginal cost of producing that is basically very low. So at some point in time, you have a little opening up of the pricing curve. To the bottom left-hand chart, you have the sort of price, and what you can see there with PV3 is in the yellow is a collapse in price. The question is, do you stop producing photovoltaic capacity? The answer is no. You can actually keep on going until you have enough, until you get a particular position where the amount of photovoltaic capacity is enough, right? But it's a lot more than what's required to meet demand in the middle of the day. But actually, what matters, but the value collapses. So what you're actually looking at is what's the realized price for photovoltaic capacity. And at that point, an equilibrium is reached when the PV saturation, that's the saturation point, is basically the point at which the realized price for the PV is actually equal to its LCOE, where its LCOE is the levelized cost of electricity. So it's the average all-in price that it needs to cover. Now, enough of that. I've done it before. You see a link at the bottom. Let's talk a little bit about electricity demand this year and what's going on with generation in Spain as well. Okay, so let's start with electricity demand. What I have here, you don't have to read the text, that's for afterwards. Look at the picture in the bottom half of the screen. What you have is the hourly load profiles for both 2019 and 2020. The 2019 figure is the orange one. So if you can see orange behind the 2020 line, it means that 2019 was higher than 2020. That's all fine and dandy. These are actually the weekly averages. What I did here is we're actually starting, this is the whole of the year, but you're sort of doing an Monday to Monday. Monday, Sunday. There was the year started on a different day, Tuesday and Wednesday of last year and this year. So if you synchronize for that and you're looking Monday to Sunday, differences in demand, the curve of numbers or the numbers across the top of this chart are correct. The lockdown actually started on the 15th of March in Spain. So Monday the 16th is really 0.0 with respect to coronavirus, not coronavirus infections, but coronavirus lockdown and reduction in economic activity. First thing to draw in mind is that if you look at the demand levels up to, in the first 3 months or first 2.5 months of the year, we're going February, March, middle of March. There's a lot of red in there. So there's a lot of orange, there's a lot of red because of the numbers. So we already had lower demand. But one of the reasons was that it was a very warm winter in the Northern Hemisphere, so demand was quite low. Then we actually look at the period of the lockdown. And if you looked at the numbers, minus 7.4%, minus 9.2, 19, 25, it looked like we were going down a hellhole. Right, so it's going absolutely dreadful. But one thing to bear in mind was it actually stabilized. So you can see that the demand reduction stabilized. And one of the reasons for that is that you actually had a change in when it was Easter this year relative to Easter last year. So Easter this year came early, so minus 25.1%. But you were actually comparing a week of the Easter holiday with a week from last year, which had higher demand and no Easter holiday. Right, so you have to be a bit careful. So really, you're looking at somewhere between, I don't know, maybe just over 10% reduction in demand over that particular period. And if we assumed minus 12% for the rest of the year, you're probably looking at that's assuming that there is no recovery in demand within 2020. You're probably looking at a reduction of demand of about 9%. We can all argue about what the specific number is. 9% is actually quite close to the negative GDP figure which the IMF recently published. This is the April 2020 World Economic Outlook. They're predicting minus 8% drop in GDP for 2020. So it's actually a very high degree of correlation between GDP and electricity demand in this particular case. You remember for a while there's a period where in the process of a country as it develops, the GDP elasticity of demand is actually quite high. So GDP grows by 1 and electricity demand tends to grow by 2, for example, 2% per year. But then when you get sort of developed and you move away from manufacturing industry towards services, that GDP intensity falls. So you tend to get a growth in electricity demand which falls below the GDP growth. In this case, we've actually come back to the numbers being quite similar to each other. On that basis, what does the IMF think about recovery in 2021? And the answer is positive 4.3% growth rate in GDP. So there is an expectation, if we believe that that link will be maintained, that there will be a recovery in 2021. Okay, so let's have another little recap of what the impact will be as demand falls using the parabola chart. So you can see here that daily demand just drops. What happens at first case, if you look at the intersection between the dotted line and the solid red line, this is with the PV4, by the way. The question is, we're at the previous equilibrium. Is it sustainable? And what happens is that you actually open the window of very low pricing for a longer period of time. That's not sustainable because on average, we've actually dropped below the LCOE of PV. So what actually needs to happen is that the equilibrium amount of PV drops. That's actually quite obvious. If we're trying to reach a penetration level of a particular penetration level of renewables in a system, and the system is smaller, by definition, we need less of that particular technology to be deployed, right? And what's interesting about it is the shape of pricing across the day is actually the same as what it was in the original equilibrium. So we have a certain opening up of the window of low prices, which is the same as what it was on the sort of PV4, the original one. So that's quite interesting, because in effect it means that we shouldn't really see a huge change in pricing per se, but what we will see is just less, renewable capacity being commercially or economically viable under the system, right? Regardless of targets. If the government has other targets, that's another thing. Now, what's going on with thermal generation? You can look at information from either ENSOE or Red Eléctrica. I'm using information for Red Eléctrica for the daily dispatch. So the chart that you see at the bottom here is actually daily dispatch for this year, 2020, from the beginning of the year. The strata on the cake represent different types of technologies. I've done it in a way which I think makes sense to me, which is, again, remember I'm an economist, I could talk about supply and demand. So the question here is, what does the supply curve look like for energy in Spain? And things like nuclear would be expected to be running baseload, so all the time. And that's what you see as the blue block at the bottom of this area chart. After that, we have cogen and waste and things like that. And then in the middle, there is the solar, the sort of PV, CSP. CSP is concentrated solar power, which have a little bit. And then we have the wind. Wind's green, by the way. Then we have the blue. The blue's a hydro. And then the icing on the cake is actually the combined cycle. I've said it like this because it's actually quite important. The black line that is overwritten on it is actually the average daily price, the day ahead average daily price. Now, there's a lot going on in this chart. I'm going to focus in on three elements. The first one is wind, or the renewables in general. The second one is nuclear, and the other one is there is information here that you probably can't tell, but I'm going to show you that Microeconomics 101 actually sort of works. Top left chart, in fact, the three charts on your left-hand side here are exactly the same data that was in the previous chart. Top left chart, you've actually got wind and PV dispatch. Obviously, because it's daily, you don't see the parabola chart effect of the wind of the PV. It's just daily totals. And as this becomes sunnier and deploying more capacity, dispatch is going up. But what's really driving things is wind. Wind is it's been very much windier since the end of last year than the historical average would have suggested. And if you look very carefully at the sum of the PV and the wind, again, this is a cumulative area chart, and you look at the way things are jumping up and down, it's inversely correlated with the black line. In other words, when there is a lot of wind or a lot of renewables in general, cumulative basis, prices drop. Okay, that's cannibalization 101. Okay, so in case anybody tells you that cannibalization is going to be a new thing in the future, actually we've seen it today, and you can draw exactly the same type of charts in the historical, using other historical information for previous years. You'll find the same picture. So we know that when the wind blows, and by correlation, when the sun is shining a lot, we're going to get this type of impact. Remember, we have a lot of onshore wind capacity already in Spain, so 24 or so gig, with a peak of less than 40 or around 40 gigawatts a year. So whenever the wind is blowing hard and all the wind farms are dispatching quite aggressively, it's going to make quite a big impact onto what the residual demand is. Talking about residual demand, or before we talk about the residual demand, let's talk about nuclear. There's been quite a few discussions lately as to why nuclear is inflexible, and everyone seems to have forgotten about that and just made that assumption. This chart clearly shows you that is not true. Okay, so nuclear generation is quite flexible. Spanish nuclear generation is quite flexible. I mean, what you see here is basically since the beginning of the year when they were dispatching at full load, that's about 7 gigawatts, by the way. And it's ended up at the end of actually it's like last week or earlier this week. End of last week to be technically correct. And what you're seeing here is basically it's dropped off by about 40%. Okay, so that anybody tells you that nuclear doesn't have the ability to go up and down, it's not really true. However, it's a little bit different here in Spain than in France. In France, they tend to be quite flexible within the day, right? But you have to remember, if you have a bigger starting load of capacity dispatching, if you ramp down all units 10%, you can get that sort of flexibility being additive. It can be additive. What happens in Spain is they tend to program the day ahead on the basis of what they see prices. And what you can see is that there are these downward spikes in the dispatch. So if you're thinking of a pricing in the day ahead market of around 15 euro per megawatt hour or below that, you will actually see the nuclear power stations coming off and allowing others to basically pick up the sort of gap. So when it comes down to it, who's providing flexibility and who's setting prices in the market? And the simple answer is, well, it's a sort of mixture of hydro and combined cycle. The most important thing here to notice is that the combined cycle has not disappeared from the dispatch stack. So despite the fact that that demand is lower than what it was before, CCGTs are still required. Okay, despite the fact that prices may be lower, there's still CCGT as a reference point. But the reason why CCGTs are still referenced is because they can still make money at some of these prices on an hourly basis. The reason being that gas prices are extremely low, which is a subject I'm going to turn to right now. The other thing to notice is that hydro tends to also, the dispatch of hydro on a daily basis tends to also be correlated with the pricing. In other words, when prices are higher, hydro dispatch tends to be higher as well. And the reason for that makes perfect sense, by the way, is that what they're trying to do is basically maximize the value of the water in their reservoirs. I said flexible, right? So, I mean, there's obviously inflexible hydro. So, for example, right now, in the second quarter of the year, historically, is when the hydro dispatch is at its highest. Okay, but that's basically an issue of the fact that there's snow melt from the mountains from the winter snow and stuff like that. So actually here, and it's quite nice because in this bottom left-hand chart, you can see how both of them tend to trend. You know, the more CCGT dispatch there actually is, or the cumulative sum of hydro and dispatch, the higher prices will actually tend to be in the market. Okay, so we're learning something here. Renewables is important. The story I was telling you about the drops in prices when renewable dispatch is high are factual. The fact that people say nuclear is inflexible is just not true. And the fact is we still have CCGT as a reference to set prices in the market. So we can still keep in mind, despite the reduction in demand of whatever up to 12 to 15% that we've seen since COVID, combined cycle power is still a reference price for setting prices in the Spanish market. What happens using our simple model when you have a reduction in the cost of producing electricity with a CCGT, right? We go back to the original equilibrium of PV4. Well, what happens then is that the period of hours where we had very low prices to the same as before, but what we have is sun up and sun down hours, we have lower prices. So on average, again, we have prices for the levelized cost of electricity lies above the realized price. So what happens is that you have to move towards another equilibrium with less renewable capacity. And what that does is it sort of closes the curtain of low prices enough so that the average pricing that's realized by the PV sort of compensates. All right. So that's why I use the expression close the curtain. That's what I've written here. All right. So which also raises a question, if we think that from now on until 2030, we're going to have the type of situation we have now, are we going to have to revisit the 2030 targets because of the ruptures in demand? Are we going to have to revisit the levels of support because it's just not commercially viable for as much PV as is required given the government targets? Questions for the future. Right, where are we with respect to generation costs? These charts from CME are nice. You got Brent's currently, these are all Friday close of day prices. Brent crude $30, $31. That's not the 70 we were a year ago or so. Fair enough. Notice that that reduction in the price of crude predates slightly the COVID crisis because we had a fight between the Saudis and the Russians. The gas price, this is the TTF, it's a reference price for our friends in the Netherlands. Untitled Transfer Facility is one of the European hubs. That began to drop way before that because we have a lot of liquefied natural gas around the world. Current price is that's dollars. I think that's, that's 5.83 euro per megawatt hour fuel equivalent. If you double it, you get the price of fuel for a combined cycle power station, so about 12. All right, and then you have to add CO2. That's another story. We'll leave it apart, which is the next point. 19.29. I think that price is a bit low, historically speaking. If you buy CO2 today and the price rises in 3 years, you can resell. So I think it's basically a reaction to the fact that there's a reduction in economic activity. Anyway, there's one of the other questions that's been raised about CO2 pricing is should the European Union intervene to try and set a floor price, or maybe even increase that floor price to ensure that renewables remains competitive vis-a-vis gas prices, which would solve the problem of trying to maintain, the relative competitiveness. Now, quite complicated models. can be used to try and predict what prices in the future. Look, just go and have a look at the futures. I'm not a great fan of them always, but look, this is a real market with real buyers, real sellers, and real money. What is the baseload price expectation for next year? 41.10. And for the next few years, it's in the low 40s, between 41 and 43. So in other words, there's an expectation that things are bad right now, but there'll be a recovery following this winter, or following next winter, this coming winter, and then prices should stabilize about 41. Something to give you in mind. And my opinion is that that's actually realistic, because if you look at the historical trend, which is this chart on the lower left, when you see demand varying over time, and you look at what the impact is on pricing, it's far more useful to look at what's going on to, say, the Brent price, which indirectly links to the gas price, right? To basically find out what the movement in electricity prices is going to be on the spot market, rather than demand itself. Okay, so just a final comment. I think they're despite the fall in demand and the fuel cost, which is all driven by the lack of economic activity because of COVID and the lockdowns, I think renewables, by definition, are taking a hit, right? And they are in relative terms less attractive than they were beforehand. But there is an expectation even within the market, and I would tend to agree with it, that things will revert to trend. And if they don't revert to trend, then it might require a bit more direct government intervention at a European or Spanish level. Then we can have other conversations, which we're not going to discuss immediately, about auctions and things like that. But, there's a bunch of questions just to bear in mind, and a few of them are actually related to how do you think all this is going to pan out with respect to PPAs, which is where I hand back to Max and to Miguel. Thanks, everyone.
Thank you so much for the presentations. Give it back in. I think we just go directly to Mr. Miguel Marroquin. You will be focusing on the PPA market.
Good morning. Good morning, everyone. So you should be able to see my screen right now. So first of all, I want to thank PVBOX for the opportunity to talk to you today, and also to share the floor with the Kim kids, for whom I have a huge respect. I hope you are all safe and sound at home. So a quick view at the PPAs, energy transition, and then with some notes about the current situation, okay? I understood from PVBOX this is going to be streamed in the YouTube channel, so I won't focus on the text on the slides. I will try to go fast so we can cover as much as your questions as you have, okay? So just a few numbers about why I'm speaking here. So I lead a very small company who specializes in PPA advisory. We have closed about 2.5 gigawatts of market parity PPAs, which are the ones relevant to energy transition, and we are on over 5 gigawatts of mandates across the world at the moment working. So the thing is, being expressed in PPAs, people come to us, and the second, if not the first, the second question they always ask is, okay, which price can you find me for a PPA? And that's actually not the question, and I want to spend some time on this. There are a lot of PPA structures out there, and you see, judging by the volume or how volume is treated, judging by how price is dealt with, dealing by whether it's physical or financial. So we find different options, and they don't have the same price. They don't have the same characteristics even as contracts. So my answer is always, well, it depends. Which PPA do you want? Which price do you get? It's not just one price, right? So since this is available to you, these are some brief summary of some structures that we have seen, that we have closed in the market. So all these options in Spain are available. In Spain, also in the Nordic market, in the UK market, in Germany. So all of this exists, okay, and is available to you. If we just focus quickly on pricing structures, for those who have been in the market for a while, all of these are available. So the usual fixed price that offers full hedge but no upside, the floor mechanism that protects against the downside in return for a piece of the spot revenue, the collar, which is a subset of the floor mechanism, simply where we ease or we let's say make it cheaper by also selling a little bit of upside, and the balancing floor that is still a bankable mechanism, but with some very specific risk considerations. There are a couple of counterparts proposing this in the market. So again, this slide is available to you. If you should have any question, know that all of these are available, and they're all bankable. Okay. Next thing I want to cover is that, again, when people say, well, which PPA price can you find me, Miguel? Well, I always go back to the thing, okay, which PPA do you want? And then you need to understand that price is something that one can get a price in the term sheet at the very beginning, but then all these elements that I'm showing here have to be discussed and negotiated. And they all have a price impact, or could have a potential price impact. So be wary of too early price indications, because it will move. Prices will move, and this is a negotiation. It's a long-lasting negotiation. These contracts are for 10 years, 15 years, 20 years. So that's a long, long time. About another question I get quite often is, Miguel, do you guys close utility PPAs or corporate PPAs? And I can answer very quickly. Most of what is being done at the moment, and you just have to see the news, is utility PPA. Why? Because it's easier. These utilities, these traders, they already know the market. They are risk hungry. They are faster making these decisions, getting these mandates, and they can get big volumes. Corporates also are interested in doing this, but in a different fashion for now. If we look at the news, I think there are a number of transactions being announced on corporate PPAs, but they are signed with a utility. As much as I know, there are only one or two which were signed directly between a generator and an industrial player, which is I guess, something that will happen more and more in the future, but we are not quite there yet. So for those of you being potential generators or investors, again, it's something that to keep on focus, because it will come, but not just yet. And if you are a corporate, well, then you should know that there are at least two ways you can do this. Through what we call a sleeved PPA, which is basically an equivalent to the physical PPA on a utility PPA, which is basically we directly substitute part of your supply with a renewable power. Or the synthetic PPA, which would be basically your supply remains the same at spot or with whatever hedging structure or strategy that you have, and you add a layer of a financial swap, a contract for differences, where you swap the value of the spot market for a fixed price with a counterpart. And they are both feasible. They're both feasible. They're both bankable. None of them pose accounting problems, which is something I hear very often. We've seen this being done, okay, and there's no issue. Key external PPA price drivers. I think Kim covered this very nicely, and I could not agree more with what he said. But let me just make for recap. PPA prices are and should be priced against futures market. So yes, we've seen futures markets taking a dive, and that has propagated to PPAs in some degree. I think some utilities or some players are also abusing of the situation, so they are trying to price PPAs on LCOE instead of futures market, which is an unfair way to do that. On the other hand, corporates typically should have been profiting from this situation, but I think they have other problems right now, like their demand, as Kim exemplified. The demand has gone down by about 10%, and that's been mostly on the industrial segment and the SMEs. So on the PPA supply and demand balance, currently, indeed, demand exceeds supply, which means that off-takers have seen an opportunity to price higher their risk premiums and margins, or that is trying to do so. That's why it's important to know who you are talking with from the very beginning. Nevertheless, we see a great influx of capital. So projects are not halting. Investment appetite is still there, and we also see new off-takers. More people coming in, like I mentioned, some new corporates, some new investment banks, even some reinsurance structures being there. So offering more alternative to generators. Just a line there, something I mentioned before, especially in Spain, where I personally think that we have seen the epicenter of PPA development, market parity PPA development for the past 2 years, a mirror game, right? Market is already discounting something. The futures market are already discounting some degree of cannibalization. What we can say about this is that we see this in PPA pricing already today. We have seen the risk premiums for us-produced PPAs, especially for photovoltaic technology, taking a huge increase compared to what they were only 3, 4, 5 months back, or even 6 months back. So yes, the fear of cannibalization, if we can call it like that, is propagating. But I would be a little bit, I would take it from a different angle. Perhaps simply, are perhaps utilities taking the opportunity to just fish in that market and see if they can close PPAs at a lower price? So yeah, we might have opinions about that. Again, something to cover maybe around the Q&A. Ups and downs, things that you thought they were covered, and then you figure out that COVID comes and gets you by surprise, and oh, how do I deal with this clause? How do I deal with that feature of the contract? So be careful. This is just the beginning. So I think a lot of statistics say that we have closed about 5 gigawatts of PPAs in Iberia since 2017. And my personal expectation is that over the next 5 years, we will close another 10 gigawatts. So this is just starting. There's no standard. We are setting the standard as we speak, little by little, all of us together. And this has to do with market parity. Market parity is reshaping the energy market. There was something very interesting in Kim's presentation before. He passed subtly saying, well, market design or regulatory intervention. Would that happen? Capacity markets, change of market paradigm, subsidies, auctions. Again, we don't know where this is leading to, but definitely PPAs are trying to leave the renewable energy afloat in these troublesome moments. So with this, I think I want to thank again all of you for your attention, and I want to leave more time for the Q&As, which is definitely the part that you will benefit the most. Thank you, everyone.
And thank you so much for the presentations from Miguel Marroquin and Mr. Kim Martinez. So firstly, I think we try to cover all these questions we collected from the registration. And I noticed that so many people are caring about the price of electricity and the price of the PPA. So let's just pick some of these questions. Let's start it from this one. So it asks, how do you see baseload PPA from a risk perspective for solar PV plants? So, Mr. Miguel?
Yes.
Yeah.
I'm glad that someone brings this question up, because that's one fight I have. I see them differently. Yes, baseload PPA carries a bit more risk for the generator, but 2 points. A, it's totally bankable. So someone tells you otherwise, he's wrong. Baseload PPAs are bankable. And B, well, it's a matter of economics. As I said before, if the premium you need to pay for the as produced it goes into some level, well, maybe it's not worth anymore buying that insurance, right? And it's better to live with the risk on your books. So it's something to be decided by the generator, of course, but there's no obstacle for it. So I invite the person asking this question to really consider Baseload PPA.
Yes, thank you so much, Mr. Miguel.
I would add only one thing here. Can you hear me?
Yes.
Yeah, just one thing. Miguel, you'd appreciate this, right? Last year, OMIP introduced the solar contract, the futures contract, and it didn't really trade, or at least if you observed what was going on, it basically looked like the peak price. Right, and what you're actually observing now, if you go to OMIP's website and you start downloading, for example, this is at least there's some of the stuff still for free, right? So if you're looking at, say, market results or file access, and you download the daily end of market reports, and you compare what the futures baseload, the picture I showed you on my presentation, which is focused on what's the day ahead for the years, right? So it's the annual contracts in the future. But if you actually look at the solar realized price, there's an expectation that the degree of cannibalization will be increasing over time. So whilst I think last year, say 12 months ago, it was more of a theoretical concept, people are actually spending quote unquote real money. And, and their view is that it'll become more of an issue. So it's not something that's blindsiding anyone. That's really what I wanted to say.
Yes, thank you so much, Kim. And thank you so much, Mr. Miguel. I think we're moving to the next questions. Let's see. And it asks if you could forecast the price range for PPA when everything back to normal, especially when the COVID-19 was killed. So, Mr. Miguel, would you please forecast the price of the PPA after the COVID-19?
Well, no, I can't, but I can at least share my personal impression. I think PPA prices have taken a small dive. As I said before, there are like two movements there. There's the rational movement and an irrational movement. So I think the rational movement will be compensated after COVID. So I think that there's a potential for a small hike in prices, especially in as produced structures towards the end of the 2020, and also a small lift in baseload prices, although they have been far less affected by coronavirus.
Yes, it's interesting. And it's also the question is about the forecast. So it's asking the pool price of electricity in upcoming 5 years, 10 years, even the 20 years. So, Mr. Kim, hello. Mr.
Sure.
Kim? Yeah.
So, I'm trying to. I can do two things. I can talk for 4 hours and give you a very detailed description as to why, how, what, and everything works, and talk about solving the Rubik's Cube. Or at the same time, you can just say, look, remember the simple model, right? So long-term again, I'm an economist, so I'm allowed to talk in these sort of general terms, by the way. Just remember that there's some sort of more detailed analysis goes behind it. I'm just making it up as I go along. I like the market view, not because it's the market per se, but because to me it's like what's economically sensible. So from an economically sensible perspective, prices should converge on the technology, on the cost of building that particular type of technology. That doesn't mean there's no uncertainty, by the way, right? So in the long term, if your representative baseload technology is going to be, say, wind, right? I'm saying wind because it's carbon free. The other option is obviously PV with batteries. Okay, so those two things are going to give you something that's like baseload. One of them gives you firm baseload, the latter. The first one, everyone complains and says, but wind, you don't know when it's going to blow. And I go, well, that's true, but let's not confuse what happens in the spot market to the fact that there's wind more or less all the time, in the daytime, nighttime, winter and summer. PV has a completely predetermined dispatch profile depending on whether the sun is shining, right? So they work slightly differently. And you can obviously price these ancillary services and balancing markets separately. right? So if you're just thinking about what does the prices have to look like for long-term baseload, the answer is select the technology you think is the most reasonable one and just focus on that. That's the movement towards where prices should go. Now the thing is, that's already opening ourselves to a series of uncertainties. But if we know where we are today and we know what those future costs will be, then the whole question is, what's the degree of transition and speed of transition towards that? And my point there is, well, the more attractive things are today, the quicker the transition will be. If things are slightly less attractive today, it'll take us longer to get there. And that's where, Miguel and I share this sort of wonder of what are the politicians going to do in this? What's the decisions of intervention in the market? Because obviously, if you do bring in the stated 3 gigs of capacity auctions in Spain from now until 2030, and actually the market could only have absorbed, say, 2, just because demand's a lot lower. I'm just not saying it's going to happen. I'm just saying, imagine if. And at that point in time, anyone who's working off the benchmark of the spot price will realize that they just can't make any money off that. And then we're going to have other types of sort of balancing requirements. Either you have to compensate, how do you compensate existing parties who are outside of the auction process? Should you use green certificates as a more equitable resource? But anyway, the simple answer on where the hell our price is going to go is take a view on gas and just look at the recent historical trend between electricity prices and gas prices, and you probably won't be too far wrong, at least in the medium short term. I mean, it's in the futures as well. If you look at TTF plus or you look at MEP, for the futures gas prices, you'll see there's a quite close correlation between what people expect the future electricity prices to be. The question is, that will run you out for the next 2 or 3 years, and afterwards, then it's really about what you think the renewable deployment will look like, and what sort of transition do you have to the sort of quote unquote long-term equilibrium.
Yes, thank you so much, King. It's really impressive. Let's go into another questions, and it's also it's asking about the data market. It's asking, what do you think of the data market on private PPA after the COVID-19? It's almost the same questions, I think. So, Mr. Miguel, would you like to share some opinion on these questions? He asked the data market on the private PPA after the COVID-19.
Sorry, I don't fully understand the question, Kim. What was the question? What was the question? The day-ahead market for corporate PPAs?
Private PPA.
Private PPAs.
Yeah, private PPA.
Well, again, as I said in my presentation, it very much depends on what one is looking for. If it's just looking for full price insurance, so a fixed price, or just downside insurance, or is happy to give upside. So the thing is, if I need to give a range, right now I hear from the market that there are people entertaining discussions as low as 32 euros per megawatt hour. And depending on where you are on a structure, you can go up to 41 euros per megawatt hour. So there's a huge range there, right? And the difference is basically who you're speaking with, how the contract looks like, and what are you getting for such price, right? So it's a very complex discussion. I think if it's not satisfied with such a big range, we will need to look into more detail the exact specifics of what he's looking for.
Yeah, thank you so much, Mr. Miguel. The next question, I think, I'm not sure whether if either of you can answer this question, is mentioning about the import or the export of renewable energy technology manufacturing. He asking how would COVID-19 impacts the export or import industry of renewable energy technology manufacturing?
Well, I can take that. I can take that maybe for a second, because one thing that a lot of people is concerned, was concerned at the early stage of COVID, was whether they would be able to still import, for instance, modules coming from China, right? And actually, the impact we have definitely seen has not been so much. So I think COVID is having only a small impact on the actual import of material equipment. However, it's having a greater impact on all the administrative process of licensing, development, and so on. So the internal market issues more than the actual import-export of goods and technology.
Yeah, another thing too, the only thing I'd say is, well, this is a personal anecdotal evidence. My brother lives in Shanghai. So one of the things that happens there is I always seem to be, say, 6 weeks ahead of what normalization or adapting to COVID will look like. So that's another thing which is also much true. I mean, Max, you'd be able to sort of verify this as well from your personal experience. China is going back to whatever the new normal is, right? But the other thing to bear in mind is, so we're slightly behind the curve with respect to that. But the other thing to remember is we're talking about long-term investments, all right? So if you decide to cut a bad deal today, and yet you know that you're looking at an investment for 20, 30, or 40 years, you're going to look pretty stupid in 3 years' time when there's a vaccine and COVID becomes a question of the past, and you've basically tied yourself to some long-term contracts at a very low price. The thing there is that I'm not saying that it's not a bad thing and that at the time it didn't look good. I'm just saying things change over time. So your whatever upside you have as an equity investor is sort of going to be pretty much undermined. But with respect to what that means for the industry in general, the industry will basically have to take a hiatus. I think most of us are, the Economist talks about the 90% the economy and things like that. But at the end of the day, this is still a growth area. The Spanish companies do have a lot to provide with respect to this. There are experts in this country which are also in the export business. So, technology will be coming in and out, and hopefully that will not be shut down because of COVID. And hopefully we'll be able to go back to something which allows for this continued exchange.
Yes, thanks so much, Kim. Thanks so much, Miguel. Let's move into other questions. Let's see. I think this one is more directly. He want to know what reasonable price corporate PPA could be negotiated for a wind farm. I think he's want to know the wind farm. Miguel?
Yeah.
What do you know about this?
Yeah, I guess maybe it was someone who read the previous question and when I said we need to be more specific. Well, again, the good thing about the wind farm is, as Kim also explained before, that its profile is much closer to a baseload than a photovoltaic. So a wind farm is a good candidate is a better candidate for considering a baseload PPA. So again, baseload PPAs are closer to baseload prices, or the explicit baseload prices that one can see in EX and OMIP. So only few discount has to be considered. So we are talking about ranges nearby the 40s in euros. If we are looking to a as-produced structure, actually, we just closed a very large one last week, but of course that's sensible information about PV cannibalization. Inversely, if someone believes that PV is to be highly cannibalized, the consequence of that belief system is that off-peak prices should compensate to form a new baseload price. So that should benefit the wind profile PPA. So I don't know how clear my answer was, but if anyone has a more specific question or wants to get a run, can get in contact with me.
Miguel, that's quite good to know because some of us work in this sort of slightly theoretical world, but I'm glad that you're saying that what I'm coming out with as my view is not completely made up. The other thing I would say about that, which is actually to your last point about off peak, on peak, does it make sense? In OMIP, if you actually look at it, I'm sorry, it's EX as well, but if you look at the peak price for Spain, over time it actually drops below the base load price. Because peak is 8 a.m. to 8 p.m., by the way, for those who don't know. So there is an expectation there'll be so much PV coming on that the actual middle of the day price will drop. But two things about that. The first one is I think it opens up opportunities for other types of technology such as storage, which we haven't talked about a lot about today, but we're all very aware is a specific issue, especially if you're going to see these big swings between nighttime, say daytime prices. I think you're absolutely right that wind will take advantage of that. The other thing is that in general, I don't think it's reasonable to expect prices to just stay higher when wind can be quite cheap and PV can be quite cheap. I think in general, average prices will tend to drop. And therefore, the degree of cannibalization will exist, but it'll be minimized with respect to whatever flexibility there is in the system with existing hydro, then batteries coming on and wind taking advantage. It'll be fun to see as a hypothesis whether that's how things pan out. But it is.
In that scenario, Kim, then the baseload PPA is just as good as a pay-as-produced PPA for a wind asset, right?
Yeah, but my view is that they're actually quite similar. So yeah, when I'm talking to, I know everyone gets annoyed with me. I use the expression quasi baseload. Wind is quasi baseload. It's not exactly firm, but it's there more or less all the time. And one of the things to do is, if you don't believe me, well, just look at the average realized price for wind in the past few years. So you go through the historical prices on an hourly level, and you'll see that wind basically always tracks the average baseload price. And now, do you remember before I showed you a picture where it is that we're actually getting a collapse in pricing whenever wind blows? So people expect wind to actually, get a realized price far below, because if there's a lot of wind, then clearly the price drops. But what I mean is it pushes the average down as well.
Yes, thank you so much, Kim, and thank you so much for Miguel. And I think the next questions, let's check our Q&A box. I just noticed some question has been raised. Let's see. I think this one is specifically for Kim. Come on. We think. Almost the same questions is also about asking about the pool price. I think I have asked it before, so let's try another one. Could you please elaborate how do you see producers manage the risks and the disadvantages of baseload PPA, especially from balancing the axis? Yeah, Mr. Miguel, would you like to share your ideas on this question?
Yeah, I think it's a little bit longer. So if you scroll down, we see the rest of the question. But how is it managed by warehousing that risk? Basically, it turns into a cash management problem at the first iteration, first approach, and then one thing that we have been assessing or helping some of our clients is actually being a little bit smarter about it. So from the baseload, from a 10-year baseload, one can, on a 1-2 years ahead, then actually shape your baseload into a. There are companies going into this direction. I think recently we saw the announcement, for instance, from Sonerix. Is the first generator IPP that has become member of EX, for instance, and I think it goes into this direction, right? So I think that is part of the market parity story, that producers have to learn to manage price risk.
Yeah, and I think there's another aspect which is separate of what the settlement issues are and how you interact with the futures market or the day ahead. There's also the aspect of the ancillary services. So, relative to what you think you're going to be making from your PPAs, sometimes it might be worth your while to basically, not dispatch or not physically meet those requirements, but actually use the market to meet those requirements, and basically, and maybe sell your services to ancillary services. In Spain, it would be to Red Eléctrica, for example. So there will be optimization and asset management issues on an hourly, hour by hour, maybe sub-hour by hour in due course basis, which we are yet to, which a lot of people are yet to sort of understand, let alone begin to value.
Thank you so much, Kim. Is there any thing you want added, Mr. Miguel? Or we jump into another questions?
No. Let's move to the next question. Let's answer as many as we can.
Okay. So let's do this one. It's asking how the COVID-19 has altered corporate PPA negotiation. Is there still a room to close a corporate PPA? Hello, Mr. Miguel. Did I repeat these questions for you?
Sorry, Max, can you put it in the screen because I cannot read it. Sorry.
Okay, I think this is not on the screen. I think this is a question we collected from the registration system.
Okay.
He's asking.
Okay.
Yes.
Sorry.
Yeah.
Go
He's
again.
asking. Yeah. He's asking about how COVID-19 altered or change
Okay.
how the yes the corporate PPA negotiation, and he also wanted to know is there still a to close a corporate PPA?
Yes. So how has COVID influenced? Well, it has influenced PPA negotiation. First of all, by in some cases having to discuss price. We've seen a number of processes where some off-takers promised or made some idea of what they were because of the dive in pricing. That's clear. I think also has led a lot of generators to be a bit more careful and to be a bit more worried about for instance, commitments with regards to start date, COD, and this kind of considerations, which before people were a bit more easier on, and now they are taking, I think, are taking with much more care. And whether is it possible to close PPAs? Very much. I think since COVID, we ourselves we have been working in 4 transactions closing, of which we have closed 2 of them in the times of the COVID. So over the last month and a half, and the other 2 are also progressing. So yes, is it possible to close PPAs even in these situations? Hope that answers the question.
Yes, thank you so much. I noticed that there are also lots of questions asking about the price, but I think Kim's presentations has already covered those questions. So if for further discussion with Kim, I think I just suggest for these people who are asking about what are main modeling tools the company focus on the renewable energy used to take the best decisions, I highly recommend that you get the connections or get contact with Kim directly by the email on the screen. I think, as you can see, this is Kim's email. Yes. Yes. Let's see some other questions in the Q&A box. Let's see.
I noticed one about the nuclear closures. Will that have an impact on pricing? I mean, just to be clear, we're not in Germany, so we don't have this accelerated, push to try and close them down. The expectation is that they'll begin to close at the end of this decade, and sort of by 2033, 2035, they'll all be closed. And the other thing to bear in mind is that I talked about it before. It's only quote unquote 7 gigawatts. The thing that's happened most recently with respect to that is that we've closed down most of the coal-fired power stations. If you look on the Electrica website, they're still technically online, but a lot of them are basically going to be ineligible to dispatch from the middle of this year onwards, because they don't meet the criteria of the Industrial Emission Directive, which limits the amount of rubbish they can emit into the atmosphere. So they're all basically going to close down. In any case, the price of coal, and even with carbon dioxide at 20 euro per megawatt hour, makes them more expensive to use than gas-fired power stations. So that the first impact is, well, we closed down all this coal-fired power station. Did it make any difference on pricing? The answer is no, not really. The reference technology is still combined cycle plant. So combined cycle plant will still be referenced. By the time that we close the 7 gigawatts of old nuclear power stations, we'll probably have a hell of a lot more photovoltaic and wind capacity online. So I don't think it'll have a major impact on pricing per se.
Yes, thank you, Kim. I noticed that some attendees asking for our speakers. I think once we get the proof from our speakers, we will share their slides with you. Let's see these questions. The question asking, is it necessary to register PPAs in any Spanish registries? Hello, Miguel, can you take these questions?
Yes, actually, no. There's no such thing as a registry for Spanish PPAs. However, I take the question to mention something that a lot of people don't know, actually, and is that although we get all the fuss about financial PPAs, physical PPAs, well, actually, all PPAs are always financial because you always need to dissociate the physical sale to the organized market, the spot market, with the price hedge. I only seen a couple of attempts trying to do that on the only one contract, and it didn't work. So that financial derivative is not to be registered in the Spanish authorities, but in the European authorities, for which all companies need to get a number, which is called a ley, legal entity identification, which is a unique number that identifies the company signing the PPA, and it is registered in REMIT. Okay, so that's the only registration that is required of the transaction once it's signed. Hope that answered the question.
Yes, thank you so much. Let's see. I think the next question would be a little bit big, asking the opportunities for PPAs in Spain, and also price, time, and condition. Mr. Miguel, would you like to share some informations about these questions?
Yes, I will use the thing before. I could speak about it for hours, but then I think could sound very specific. But yes, places, tenors. I can share my experience. We've done everything from 5 years to 30 years. So if someone wants a 30-year PPA, we can get it. If someone is happy with a 5-year, we can do it. So all that exists. Price, as I said, it depends. Between 32 and 41 right now, it depends on, you get what you pay. So it depends on which structure, right? And our job as consultants is to help our clients understanding which choices they're making in that equation. And is it possible to close? Totally, really. This industry is not stopping. On the contrary, I've seen an increase in deal flow since for the past 2 months. So I'm bullish, renewable energy and PPAs.
Thanks so much, Miguel. I think the one who raised these questions, you can go directly or with an email on the screen with Miguel for further discussions. And I noticed that it's almost reached the time limitations. I'm wondering, Miguel, is there anything you want to add, or is there any questions you want to hear from our audience that haven't been mentioned for now? Or is there anything you want to add? Yes, before we end off today's webinar.
No, again, I maybe the one question that a lot of people didn't ask me because the webinar was about PPAs. I also get some people asking, coming to me privately and asking, how do I see the development of futures market? Whether the futures market will be the next place to close PPAs, and could PPAs be a standard product? And my answer to both questions is always no. So let me use this channel, these 2 minutes to reason my answer, Max, and thank you for giving me the opportunity. First of all, I think futures market have a functioning way that is not suited for IPPs and for financial investors. The requirements, the mechanisms, it's not a fit. However, I think PPA products will develop once markets such as EX or OMIP will develop liquidity on 10 years. I think we'll develop the product. And on PPA standardization, I always give this example, which I heard in 2017. Well, a 10-year PPA is longer than a lot of marriages. So these are very complex contracts, very complex. Can we standardize them as IFET tried, or I see it hard. I see it very hard coming, because when I look at the time that I spent in these negotiations, in these details, I don't see an easy way to make a pick and choose contract. So unfortunately, I think again this industry is still in transformation. Maybe in 3 years we will find a solution to standardize PPAs, and it will be a commodity. Today is a bespoke product still. So thank you so much.
And I think Miguel here is being, I think it's very funny. 10 years, the relationship to marriages, by the way, that was a good one. The thing that also bears in mind is, there'll be development on liquidity on both sides. I'm always slightly skeptical about the liquidity of PPAs because by definition there's bespoke, but that's what people want. So, but you have to think about it in the context of any type of financial derivative being traded. There's the exchanges, there are exchange products, and there are OTC, over-the-counter products, which are basically bespoke, bilateral. Where is there more liquidity? Well, obviously there's more liquidity in a standardized product. So they basically will feed off each other. And I think that's what, Miguel, you were saying as well. I mean, the more liquidity, the more products we have, more definition, ability to provide shape in the futures, in the exchange traded futures, the more there'll be an opportunity to hedge exposure on bilateral. So the client, the customer, the final consumer will get what they want, and someone will sit in the middle and basically be able to use these other tools to mitigate the risk. And I think that's what's important. So I think, in my view, is that both will go together.
Yes, thank you, Kim. Thank you, Miguel. And I just wondering, Kim, is there any questions you wish to be asked from or raised from our attendees that haven't been mentioned for now? Yes.
Actually, I had a question for Miguel, which was, we didn't talk about it, the issue of indexation of pricing. Whether, just like in gas contracts, first of all, they were all directly indexed to Brent or crude derivatives in long-term contracts. Is there any move within the PPA structures to sort of, instead of giving you a sort of floor and a cap and a sort of fixed price, is there some sort of move to see a bit more indexation given the movements in electricity prices and spot prices in PPA negotiations?
Well, thank you, Kim. Actually, I didn't expect to get a question from you. This was for everyone. This was not thought before. Okay, this is on the spot. Good. No, I don't see that, and I don't see that coming. Yeah, I've seen these long-term contracts for gas with these long-dated Brent indexations, the 903, 933, and so on, the time lags. I don't see that very much coming on the in the short term in PPAs. Maybe one day when the investment industry in renewable will believe more in the in energy markets and the market fundamentals. Maybe this could be a solution indeed. I don't see that in the short term. In the short term, banks and investors, they want to make their investments proxy as much as possible a bond. For that, no indexation is acceptable. But I agree, going forward, maybe this is a nice solution in the same way that gas contracts used to be indexed on fuel oil or gas oil with 6 months averaging and so on. Well, this could be a beautiful solution, maybe in 2-3 years. Who knows?
Yeah, thanks for that. Yeah, I mean, my view is, look, if the underlying economics is we're moving towards LCOE, but the thing is the LCOE itself is moving downwards, then by definition, especially when it comes down to long-term contracts, will there be some sort of price reopener where you have a little revisit of what you think that sort of a reasonable price is or something like that? But you're absolutely right. From a presentation, from a financing perspective, let's make this as close to a bond as possible. If that's what the market requires, if that's what financiers require, that's where we have to be.
And the corollary on that is that, as I know, we also discussed about that in some other time. The number one question I have, and also you said that, is market design. Current market design is not renewable friendly, so we need some adoption. The problem is, will governments and policymakers be proactive and think about it in advance for once, or will we have to let the problem become a real problem and then they will patch the issue? Let's hope for the former, so we can for once take a step ahead of the problems.
Yeah, I always say to people that, market intervention by government should be, there are lots of reasons why governments should intervene where there is market failure, right? Natural monopoly, imperfect information, asymmetric information, things like that. And they all make perfect sense to me. The thing is, here we're talking about a market failure because the market itself is not sending out the right signals, right? And then, by the way, I always get scared when governments want to intervene in electricity markets because with their best intentions, they may have identified a market failure, the solution of which could be something completely different. And usually their interventions don't necessarily make things any better. So, I sort of quietly just watch, you sort of watch and learn. So we have to be a little bit cautious what we wish for, I suppose.
No, that's my fear, that if we wait until this becomes a real problem, then they will rush it in, and then no one knows which solution they will find. It will be bad intervention probably, instead of making the market really being efficient, right? But again, that's maybe a topic for another webinar. So
on that basis, it's been fun. Thanks very much, Miguel. Thanks very much, Max. I haven't got any other questions.
I just before we end all these webinars, I just checked the Q&A, and I found there's no more questions be raised. So that would be the end of today's webinars. And for this, if you wanted to get further discussions of the PPA or of the more economics, you can contact with Miguel or Mr. Kim Keats by the email on this screen. And one more, I would like to thank Mr. Miguel Marroquin and Mr. Kim Keats for taking time joining today's webinars, especially when from their busy schedules. And thank you so much for your attending, and wish you all have a nice day. Thank you.
Thank you, Max and PVBOX, for the opportunity. Thanks everyone for making time to listen to the webinar.
Thanks everyone. Cheerio, bye.